When you see this much demand for gold, and you see this much gold coming out of these otherwise fixed, price-fixing exchanges, there is a seismic shift in the world happening. Again, that's not a gold butt argument. This is to track the flows, understand the common sense, and it's no coincidence that as we're running out of the price-fixing capacity at the COMEX, gold is reaching all-time highs. Saying gold is getting much more important because things are getting much more desperate, and the ability to price fix on the COMEX is getting weaker and weaker. So yeah, this is a really important topic. I've been traveling a lot this year, and I was in a symposium down in Cape Town. I was obviously at the VRIC where I bumped into Andy Scheckman, another mutual good friend, and certainly Andy. We saw him in January. He tracks these flows very, very well to the decimal point, really, and it's a topic that's not just important about gold price movement, but really what it's saying about the condition of the world. So it's a very important question, and it's a topic I've spoken a lot about in the last few months, but really I've been writing about since 2020, 2021, this thing called the COMEX, or these exchanges, and what does it mean when flows come in and out of the COMEX exchange, out of the LBMA banks, these big bullion banks? What does it really do? You could spend hours on it, but to keep it simple and not stupid, but simple so it's understood by people who don't have time to look at the derivatives or what open positions mean or what good, stand for delivery means. In a nutshell, this exchange in London and this exchange in gold, in New York, the COMEX, they're not gold storage facilities or, really gold markets. They're credit instruments, they're credit exchanges where a lot of leverage is allowed. So you could have a 4% physical gold and 96% of a contract being 96% leverage and 4% actual gold, and you can use levered longs or levered shorts to move the gold price pretty dramatically. And my argument has always been, since I started writing about this in 2020, that the main purpose of the COMEX, which came to fruition in 1974 for gold and silver, was to keep a permanent short on the natural supply and demand of the natural price of gold and silver. The vast majority of contracts on the COMEX, for example, are long gold, long silver. So you would think if that's true, if the number of contracts are long, then the price of gold should be long. They use futures or forward contracts to set these prices. But it only takes about 8 or 9 larger bullion banks to have net short positions with massive turns of leverage. And so you may have more contracts long, but the net volume of contracts short is significantly higher. It's almost every morning at 8:30 you see the price fix on gold or silver. And it's not a conspiracy theory. Anyone who understands the commodities market or these exchanges knows that it's legalized price fixing on the COMEX since 1974. And it's just, and most of these contracts don't actually stand for delivery. You're shorting or going long. You don't take delivery of the physical gold. You just extend the contract or reuse the contract. There's no actual physical delivery. So this game of levered longs or particularly levered shorts has just been going on for decades. And what's fascinating about what we're seeing since November, really since the Trump elections, and then certainly since Trump came into the White House, is the number of contracts standing for delivery, in other words, asking for actual delivery, has gotten so much higher that there's not enough gold at the COMEX to satisfy delivery, because delivery was never the intention. It's a long-winded way of saying the world wants its gold within its own zip codes, within its own control, and no longer a part of some paper churn and burn or extending pretend that's gone on for decades. And the reason they want that physical gold and that physical silver is the world is changing at such a dramatic and negative pace, and because there's so much concern of banking risk, currency risk, and geopolitical risk, that it's an open symptom of we need our gold. We're done with this contracts game, this extended pretend game, this levered game. We want the physical gold. It's the same with silver. It's having actually in some ways more of an interesting story which we can get into. But to try and make it simple, again, for people who can certainly spend hours in the complexity of this, and there's some who know very little about it, the COMEX ran out of physical gold and silver to meet its contracts because its contracts now want delivery rather than just extend and pretend and levered shorts, which causes a problem. In my opinion, the 400 metric tons of gold, for example, that came from London to New York since November and counting has really been there because the COMEX in New York didn't have enough physical gold to meet its delivery obligations to the counterparties. And they didn't have enough because, again, counterparties are actually doing something they haven't done in decades, which is get their gold, want their gold. And as I've warned since 2020, this game of legalized price fixing on the COMEX would stop once the demand for physical gold outpaced the need or the ability to short it on the COMEX. And that is what we're seeing throughout Q1 of 2025. And that is a symptom not just about currency risk and banking risk, but certainly about geopolitical risk. When you see this much demand for gold and you see this much gold coming out of these otherwise fixed price fixing exchanges, there is a seismic shift in the world happening. Again, that's not a gold butt argument. That's just to track the flows, understand the common sense. And it's no coincidence that as we're running out of the price fixing capacity at the COMEX, gold is reaching all-time highs. That ability to keep price fixing is getting weaker. The demand from central banks, in particular from the East or from large counterparties on the COMEX, is getting higher. So that once safe and sound little price fixing mechanism in New York is losing its teeth. And the reason you're seeing inflows into the COMEX to fill the demand and outflows to fill the delivery contracts is actually just more and more of the case. It's not like the COMEX is reloading its gold and silver to continue its price fixing. It's just trying to meet good for delivery contracts. And so that has huge ramifications on not just the price of these metals, but also how the world is feeling. And when gold is hitting all-time highs, that is always a dangerous sign. Even if you love gold as we do, and for the reasons we do, it's always a bittersweet schadenfreude because, as we've always warned, and when gold reaches new all-time highs and counting, that's because the world and the currencies and the debt levels and the social unrest is getting worse as well. Because there is a flight to safety. Gold is the last resort for a lot of these realizations that sovereign bonds, U.S. treasuries, checking and savings accounts aren't going to be the safe haven. It's going to be this barbaric pet rock, this analog asset, gold. So this is a long-winded way of saying gold is getting much more important because things are getting much more desperate, and the ability to price fix on the COMEX is getting weaker and weaker. So all these things are converging in the silver market for the silver price. Nearly 50% of the silver that was once on the COMEX to allow this price fixing is just not there anymore. It's just not there. So you can't price fix silver as much, and there are massive bullion bank short positions right now, and they're naked shorts. That means they borrowed this gold to short the position. Short means bet against the price. Meanwhile, the price is getting higher, so they're in a short squeeze. What's borrowed has to be given back or paid back. They're going to have to cover those shorts with silver they don't have, or it's going to be much more expensive. And when that short squeeze comes to fruition, and it's in the process of that, the price in silver just on the short squeeze is happening in these bullion banks should be dramatic. The other thing, again, about silver, looking at the COMEX is just one way to kind of predict the trouble these counterparties are in, because there's just not enough silver there to continue the price fixing game. If you look just on the technicals, you've got a 14-year rounded bottom on this cup and handle. You can look at technicals all day long, but when that breaks 50, the prior highs, silver should skyrocket. And of course, when the DXY on a relative basis gets weaker, silver should skyrocket. So it's all connected, Donaghy. It's a long-winded way of saying between what's happening in the COMEX, what's happening with the LBMA banks and these naked short positions, in particular with silver, where there's not enough silver there. Natural laws of supply and demand are fighting against these old-fashioned systems using forward or derivative contracts to price fix. That's all getting weaker and weaker as the world is getting more and more indebted, desperate, geopolitically worried, as more and more fears rise socially, again, economically, politically, and just on U.S. sovereign bonds or European sovereign bonds. The world is realizing what we've been warning for years, not the end of the dollar, not the end of the U.S. Treasury, but a move away from it, because the issuers of these sovereign bonds aren't as trusted anymore, especially since we weaponized that in 2022. And in addition to weaponizing the world reserve currency, we've gone massively into debt at every turn. More budget deficits, more trade deficits, more balance sheet on the Fed, and more national debt. It's just not the same trusted IOU that it used to be. So all of these things are connected. I'll pause there, but it really has a massive impact on the long-term direction of gold, never in a straight line, or silver, never in a straight line, but we're reaching all-time highs for a reason. Things are collapsing at the COMEX for now. There's not enough gold and silver to continue what they were doing for decades since I was born, basically. And the world is getting more and more afraid of the US dollar and more nervous, for right or for wrong, about Trump policies, about Trump decisions, about political instability, geopolitical instability. All of this is connected. Everything you pull on comes from debt, whether it's the COMEX, whether it's geopolitics, whether it's tariffs, whether it's currencies, whether it's bond yields. It all comes back to the simple theme of debt, which is finally becoming more and more understood by the mainstream now. Certainly understood by the central banks of the East and the counterparties in the COMEX. And they see the writing on the wall. They're basically trying to get their shovels ready before the snow, and they're taking their gold and silver out.